we could do this, this, or this on the exit. So yeah, it's in there. So I'll give you another one. So option one, real fast, okay? Option one is an example. They buy one. Now investor, deal number one, we refi. Now they own two deals. Everybody with me? Infinite returns here, future returns here. Okay, cool. Or option two, we don't refi. We sell. Okay, so now what happens? This investor, as an example, invests their 200K. We hold for 3 to 5 years. Now instead of exiting, or sorry, now instead of refinancing, we exit. We get them enough, well, we exit the deal. Let's say that we hit our return projections. Somebody have a calculator that can calculate this for me. What is, well, let's just say that we doubled their money. Okay, we give them an equity multiple where we held it a long enough time that over the span with cash flow and equity, we doubled their money. Is that a reasonable thing to do? Yeah. It's a reasonable thing to do. So now when we cash out, I'll say that they've made 400. That's going to be, once again, over the span of 3 to 5 years, whatever it is, but it's also going to be a mix of cash flow and what else? Equity. Yeah. But let's say we've now turned it into 400,000, okay? We exit, sell the property. Now they have 400,000. Is that a pretty good return? What are they going to want to do with that 400,000? Reinvest. Once they reinvest that 400,000 into now another deal, deal number two. Okay, deal number one. What's 8% of 200? Well, dude, just even look at it simple as this: 200,000 to 400,000. 400,000 another 3 to 5 years later.
16,000, 8%.
But just easier. 400,000, we buy another one, 3 to 5 years later, now what do they have? 800,000. You see how it starts to compound just like anything else, yes or no? Yeah. But here's another thing that we're not even accounting for. We're accounting for cash flow and equity and these growth options. All this whole time through, what also are they benefiting from that we're not calculating here? Tax benefits. Tax benefits. The tax benefits alone, how many of your investors asked you about tax benefits?
About half of them.
They're interested, dude. If they make good money, they want tax shelters. This is one of the best tax shelters you can have. So we can refi, give them their initial investment back, and then we hold these deals together. I didn't even know that was an option. I wish I would have known that was an option in the beginning. I would have done that on damn near all of my deals. Well, most of them, if I want to keep it. I didn't know it was an option until later. Or I can exit, give them a good return, they reinvest that return, and they continue to compound and grow that way. And it makes our job easier and easier. Make sense? Once we give them that money back, that transaction, okay? So real quick, it's called a capital event. A capital event is your exit. That could be a refi, that could be a sale. These are all capital events, okay? A time that I would refi and hold, is that what you're saying? Yeah. Well, something like right now. I buy in a market right now. Interest rates are higher or lower? Higher. I buy, drive value. When I'm driving value, forced appreciation, meaning I'm income expenses, cool. But then eventually when maybe rates start to come down or cap rates start to compress again or the market pits, well, first off, when rates start coming back, there'll be a flood in. Now what happens? Organically to my apartment building, it goes up in value again, even more so. And it's a good apartment building, one that's in good condition. Refi, good position to refi right now. Maybe even refi and give investors some money back at that point, and then hold that one because I have plenty of equity in there to weather any sort of correction moving forward. Because I bought at the state of a market, like right now, the state of the market that it's in, which is high interest rates, high cap rates, higher cap rates. They're still not that high. But higher cap rates, when those things compress in the future, dude, that's where you compound your wealth for you and your investors. Everyone wants to buy at the bottom, but then when you buy at the bottom when rates are really low, cap rates are really low, What happens when they raise? You could have driven values up on your apartment building, but it makes you stagnant because it's harder to get debt. It's harder to exit. When you buy, when things are harder to pencil out, when you can pencil the deal out right now you ride the wave, and then the market softens up a little bit. That's how you compound it. People want to buy when everyone else is flooding in, when in reality, my biggest thing right now is my biggest frustration, I would say. I have properties that I have so much work I got to put into. And what do I want to really be doing? I want to be buying a shit ton right now. I want to be buying. Now's the time to buy. Y'all feel me? Yes. Right now.
How would you explain that to somebody who knows that they should?
How I just did it. That's what I would do. This is where your 12 questions come in. Why, think about, let's go back to this real quick. Think about these questions real quick. These ones within your investment philosophy. Why are you bullish on this strategy? Why are you bullish on this property type? Why are you bullish in those markets? That's your answers. See, if you don't have those answers and you don't know, you're gonna have a hard time, man, raising capital. Not because that person doesn't want to invest, not because your deal's not good, but because you haven't taken the steps before to answer the questions that they may have and truly understand why you should be buying what you're buying. Make sense? When I went to Tony Robbins' Platinum Financial event. It was in February, out in what's a place called, Whistler. And there was like 27 billionaires who were anybody that you could think of, like the top dogs that are out there presenting. Ray Dalio, these people are out there presenting, okay? Yep, and this is what he's talking about. First off, every one of them had a different perspective. Every single one of them had a different perspective of what was coming down the pipeline. I'm not shitting you, every one of them. Well, that's confusing. That's not what I was hoping I would get, like, okay, this is what's happening, go make it happen. And I'd be like, sweet. Now, every one of them had a different perspective, but every one of them, the trend, the through line was that there's, over the next few years, like similar to what you just said, there's gonna be the biggest wealth transfer in history, not in your lifetime, in history happening, and it's because of what he's just mentioning. Well, a couple things. You got baby boomers who are, yeah, well, and exiting life. I mean, I'm just kidding. No. I'm kidding. But think about what we talked about. You said you don't think your kids want your business, or you're nervous that your kids may not want your business. Do you think that you're the only one in that situation? No. Do you think there are people who own apartment buildings who those kids don't want to take those apartment buildings? Yep, no different. So, man, that's a wealth transfer, a huge wealth transfer that's coming down the pipeline there. Another one is these interest rates. There's like trillions of dollars coming due over the next couple of years. Trillions of dollars of debt coming due in an environment where rates are higher. Trust me, man, like there's people in trouble. There's people that need to get out. And you have the ability to come in and capitalize off of that. But not just you, who else? Your investors, but only if you actually have the conversations with them. Only if you actually let them know what's going on. Only if you present them opportunities, or you could be too scared to talk to them because you don't know if they want to invest and take advantage of the biggest wealth transfer in history. Y'all feel me? I think it's selfish to not ask.